Good Tuesday morning, everybody. How is everybody doing on this fantastic day? We got every asset or index product making fresh all-time highs, except for the Russell. But everything else is making fresh all-time highs as we speak. Well, the S&P 500 hasn't yet, according to that. I guess it's just the NASDAQ. Oops. Well, I know the Dow has too. The Dow is leading to the upside. I mean, just look at this rip, dude. Wow, it's crazy. Anyways, Bitcoin did put in sort of like a bullish wedge formation here, bull flag, whatever you want to call it. It did close above resistance yesterday on this candle here. It's too close to say whether or not you did close above that trend line. I mean, it looks like you did. You got resistance right above you here at monthly supply. This is where I was short from, and obviously that trade is no longer open as today's candle pushed up and stopped that trade out, and now it's back down trading at the open. So what we want to see, if there is going to be bullish continuation here, we definitely need to see this thing close above this candle's close. So around 43, what is it exactly? 43,027. Basically, the 43,189 is monthly support or supply. Sorry, if you come over here and you can see there's monthly supply. So December needs to close above that for January to see bullish continuation. We'll see how that happens or how that works out. Not getting the pullback that I expected that we would get. I thought we'd get a little bit deeper of a correction. But I mean, while markets are being straight up pushed to make fresh highs, you got the S&P 500 not far behind, literally. So we'll see how this ends up playing out. On the futures, you are trading up on the day. Let's see. We're up 7 points with a 15-point expected range. So that just essentially means that the options market's pricing in a 15-point move up or down. But the options market has not been able to price in risk because the VIX is broken. The VIX can't see out past 5 or 6 days, basically because of so much hedging activity going on and zero day to expiration options trading. Everything like that does have an effect on the VIX. But we know that there is volatility out there. Generally, what this means, the VIX at $12.51, what that in a sense is saying is that the market can move $12 in a year. All right? That's how broken this thing is. When the VIX says 12, that literally means that in 1 year, the market can move up to and around 12%. Well, we have a market that's currently trading at much higher than 12%. It's trading more around 22%. Let's get it pulled up here as I was on the wrong chart. Let me see here. What we got? Yeah, 23% as of right now. So the VIX is broken. You can take positions on the VIX if you want to, but please, please, please be very careful because you are paying a massive premium for that position. You can clearly see that the VIX is definitely mispriced as your at the money puts are trading for 29 cents. Your at the money calls are trading for $3.35, 56 days out. So, yeah, that just simply means that there's a lot more volume going into call options than into put options, and it makes the price skewed a lot. So, maybe better options to look for potential buying opportunities. All right. First thing that we're looking at today is going to be AI. It's just AIC3, the company. The reason is because it's got a tight formation here. I found it yesterday. So you can see that it did have a nice run back when Nvidia was making its, huge run back into all-time highs. It has had a pretty significant pullback here. We are above the 50 as far as as far as the RSI is concerned. We are above the 21. If we pull up the moving averages here, you'll see that you do have a bullish moving average structure. So we're kind of looking for this thing to break out. If we get a daily close above 31.43, then we would expect price to run up into the $36 area. So we're going to watch this very, very closely for the next few days. This is a rounding bottom or saucer bottom, whatever you want to call it, formation, cup and handle, whatever. There's so many different names for these things, but all it in a sense means is it's just basically consolidation. And you can see that, consolidation happens. You get your move to the upside, consolidation, upside. But we'll see how it plays out. This is one I think you should keep on your watch list. Also, let's pull it up over here. It has a very heavy short float. So someone asked me, basically, why does that matter? They don't understand what I'm talking about, essentially. That matters because so many people are short, right? So that could cause a squeeze. If we get a higher push, that could cause a short squeeze. Anything over 20 is a pretty big short float, right? So those are the things that typically we want to see if we are expecting a breakout on something. And since the markets are all bullish, since AI is still out there and being talked about, then I think you have a play here, potentially. So just keep this on watch. Like I said, we're looking for a breakout above 31.43 to really get involved. I actually put on a position yesterday because it looks like it is starting its move here. All right. So TLT had a slight pullback yesterday. Now it's right back up to that resistance level. This resistance level is just an old swing low. Let's see here. Yeah, it's just an old swing low. So it's not actually a support or a resistance. Just an old swing. Just an old swing. But price has stalled out there. It was support here, I guess one could argue. Got a open right there. So, I mean, it is a significant level for the TLT to break through. So if you want to look to be a buyer of the TLT, just make sure you manage your risk. There's obviously a trend to the upside here, and I do believe we're going to continue to see that trend to the upside, especially if the Fed starts to cut rates. In a sense, the market's got the Fed cutting rates almost like 5 times next year, but the Fed themselves are talking more around 3. Either way, as long as it's not big, huge cuts like every single meeting, that will not be a bearish signal. If it is big, huge cuts every meeting, that will be a bearish signal. All right. So you got to be able to understand the difference between the two. Either way, rate cuts is going to be good for the TLT. Okay. There's still plenty of upside on this thing. So you can get in it. You can still get in it pretty early. Obviously, you're not catching it at the ground floor. I wanted to see a deeper correction, but this thing just really isn't giving one. Like, the most we've seen has been consecutively 2 days to the bearish side, and then up she goes, or up it goes. So it's not really giving anybody any opportunities to invest in it. You can see here 1, 2, 3, 4, 5, 6, 7, 8 bullish weeks in a row. I mean, damn. Come on, man. Give us a red weekly so we can buy this thing up. So we can buy it up. Let me just make sure everything's going okay on this side. I want to pause that. Good morning, few ledges. What's happening? Can you please check TIA USDT and the XU100? Yeah. Let's check the first one first. I have no idea what this thing is, what it does. It looks new because this is Binance, so it looks new and it looks bullish. I just don't know enough about it to say whether or not it's a good product. I mean, what does it do? Is it a good product? If it is, then wait for pullbacks into support and look for buying opportunities. Right now, you're massively overbought, so you might want to give it a minute before you start buying into that. And then the what? XU100. All right, so this thing finally calmed down. And the Turkish stocks, yeah, I mean, this is what you want to see. It's accumulation. So wait for support. In this scenario, since you have been in consolidation for quite a while, since the last time we've actually talked about this asset, you've been in consolidation for quite a while. So you might want to be on the lookout for a bear trap. We have support here. Nope, it's going to be there. Nope, it's going to be here. We have support at 74.24.97. So, I mean, be careful. Maybe a bear trap happens. I don't like the structure on the RSI, but I do like the fact that it is, constructive and the fact that it is consolidating. You're bullish going into the consolidation, so you look for bullishness coming out of the consolidation. I mean, as far as I can pull this thing back, that's typically what's happened, right? It's been pretty much a one-sided marketplace. Big consolidation here. Ultimately, there's your big breakout there. So just, I mean, keep watching it. Watch support. There's no guarantee it's going to go up from there, obviously, but I like the odds. Like those are the areas that I will watch for potential entries. So you might get a bull flag. I mean, a bull or a bear trap that occurs on a weekly time frame. Just be prepared to wait for the next week to see if it does finally get back above that area. Bitcoin is currently just doing the same thing on a 1 hour time frame, not really moving. We got the S&P 500 pushing higher. So yesterday I took a bullish position on it for a day trade. Excuse me. I have to go to the 5-minute time frame. Right there. So right here, yesterday, watch this. It pulled back. This was where the VWAP was yesterday, and it was holding. So I got long, roughly right at these, right at that bearish candle's close, and I took profits as this thing pushed through new highs on the day. This was fresh daily highs, fresh yearly highs, fresh everything highs, except for all time. But that's where I got long. So probably just continue to do that, right? Look for pullbacks and then look to get long, because since the Nasdaq and everything is pushing, it's just a matter of time for the S&P 500 makes fresh all-time highs as well. And then I wouldn't be short, right? There isn't a signal to be short unless you're looking for a pullback. All right, trade with the trend. Look for long entries as supports. Don't try to pick the top. When the pullback ultimately happens, then you'll be looking to be a buyer. Go to look at the Magnificent Seven stocks. The reason Apple's been down or was down yesterday is over the weekend, China made the ban on iPhone to government officials nationwide, like all the way down to like city politicians, right? So basically, if you are in any form of government in China, you're not allowed to own an iPhone. I figure that might hurt iPhone sales a little bit, but it doesn't seem to be affecting it too much. So keep an eye on Apple. I don't have their sales, and I don't know how much market share Apple's sales have in China. But if it's huge, then ultimately you would assume that would affect a little bit. as there probably are a lot of government officials. Cosmos Adams' new project. Okay, I got you. Yeah, I don't, like I said, if I don't know about it, it's just the structure's bullish. Wait for pullbacks and to support, look for longs. Picked up a new monitor, not yesterday, but the day before yesterday, so now I can see everything. Nothing eludes me now. I wanted to get a new monitor because I was missing trades based on the fact that doing live streams, if I'm looking at one specific asset, then I can't be looking at something else that could be taking place. So that could not happen any longer. I decided to get another monitor. It's an ultra wide, and I love it. Bitch is badass. All right. Let's look at the rest of the Magnificent Seven. We got Amazon here gapping up, just barely gapping up, but still, that's a strong move to the upside. Fresh yearly highs. Meta, fresh yearly highs. Google, not yet, but I would expect it to make fresh yearly highs. As Google and Meta have been trading pretty similarly together. Microsoft, fresh all-time highs is here. Consolidation, right? Consolidation. So I would be looking to buy call spreads if the skew's not too bad. So let's go look at the MSFT. Make sure the skew is not too bad. Want to get in front of the earnings. Obviously, we don't like to trade earnings. We got $2.50 wide spreads. So now the skew is not for us. You would have to go all the way up into here in order to make that skew good. And that is way outside of the expected move for that amount of time. So you wouldn't be able to put on a call spread. But if you wanted to just buy a call option, I would buy one anywhere in the 277 area to the 382 area. Not 277, 377. The options move fast on this. The reason I can't build a spread is because, oh wait, we can build a spread on this. Can we get closer? Do not interrupt me. I am doing something. Let's see here. We can build a spread on it, but it's a far spread. But the risk to reward is pretty decent. You'd be risking 185 to potentially make 315. And we would need the market to get at least a 385. I'm not putting it on right now because we're not at support. You got to wait until you're at support. So wait for price to push back down to 365 and see if it holds the support. If it does, you could ultimately also push as low as 362. Then go and look and see if that spread is better. When you build a spread, typically I don't like to pay more than $1.50 for a spread, any spread. I don't like, especially if it's a $5 wide spread. I don't like paying more than $1.50 because most of your profits potential is going to be eaten up in the value that you're paying to put the spread on, right? So I like to be able to put them on for around $1.50, but since the skew's so high, it's making it impossible to do on most of your favorite products out there. Current positions, I have a short on XLF, or it's a put. It's a long put, but it's still, I'm looking for a pullback only. We'll go look at that. CLS is just a call, and AI, I put on a spread yesterday, looking for that to break out. Let's go look at those few assets, and then we will continue to discuss Bitcoin and what's going on there. All right, so here is CLS. Yeah, same scenario here. We had consolidation. We're at the highs, right? Consolidation. So basically, I got long when this happened here. We had to pull back into demand right there. That red candle, you can see that wick traded right down to it. Almost gave you a perfect entry. All right. There is where you should have been taking the long because you had already broke out. So if it's going to be a false breakout, you're just going to eat a stop. That's how trading works. We don't never know if these things are going to work out or not. But there's that entry, right? It traded straight down to that demand zone and then see ya. Now we're trading a little higher, not much. I'd love to see this thing get some legs and start climbing, get in a nice trend. I think the measured move on this was around $32 to $34. Yeah, that we've already discussed AI. There's the break right there on AI. So we got to wait and see if this thing will close above this. If it closes above this, then you can put on the spread. The spread that I currently have on is, let's just go look at it instead of me trying to tell you. Now you can see it's a $4 wide spread, and I was able to put it on for cheap. Let me go over here real quick and look at the stonks room. Let's see. I was able to put that on for $1.25. So with a $4 wide spread, the most you can make is $4 minus the premium paid. And in that scenario, it was $1.25. So if you can build this spread for around $1.25, if you close above that resistance today, it is a breakout trade. It is typically not the type of trading you're used to hearing me talk about, but you know, it is stocks, and stocks are bullish. Since they're so bullish, I mean, buying supports is always the best trade, but if you can't buy support, the next best thing is to just get in somehow. Get in somehow, some way. So we're currently doing okay on that position. The CLS position is up pretty good. And then this is a short put. So I sold a put. This is the actual trade right here. And then this is a hedge. But you can see the hedge is getting really, really close to the point where I need to close it and maybe open a new hedge. Right? But this will expire worthless. And even if I let it expire worthless, as long as price continues to go up, I'll make more on the short put than I lose on this one. So that's what we got going on there. So there we are. 1,400 puts the account up 28%. So we still are beating the S&P 500. We're doing better than Citadel. And Citadel is a massive firm. Tesla was a breakout trade. We were watching it. Unfortunately, this is Fed day here. We wanted to see it just close the day around the line. Then we would have got long with a spread. We would have bought out of the money spread up in here. Obviously, that trade would have worked out decently, but it didn't. It was too volatile of a day, and it continued to go higher. So I was not able to put the spread on in time. Was not able to do so. And then the other thing that I'm looking at is Amgen. Now, this one is a difficult one as far as putting on a bullish spread. I do like it to the upside. You can see that you tested the 50 here, boom, boom, 2 times, and then you got a nice little move to the upside. Currently still range bound. You're range bound until you break out of that region there. But for the near term range, this was resistance and it broke out. So we like this area to look for potential bullish entries. And obviously we're looking for prices to get up to at least 290, right up in there. 276 to 290. There's a lot of alpha in that. But the problem with this AMGN is going to be the skew. The implied volatility needs to go higher. See how it's going lower lower, that's higher, and then that's higher. But we would be looking to put it on right in this area here. So it's not really helping us very much. The implied vol isn't. So it's going to make the spread 292 without max profit of 210. So it's not a really good spread. I mean, it is as far as if you don't mind paying 285 to make a potential of $100. So you're risking like 2 to make 1 in that scenario, because you're not gonna get the full amount on the spread because price would have to literally go like to the moon in order for you to get the full amount. But what we try to do is we generally try to get in these things and make 1 or 2% on the total account equity, and then we bounce. All right, that's literally all we do. We put the spread on because it helps with the speed of the option. Second reason I don't quite love it is the spread on the premiums. I mean, look at that. You're looking at a $2 wide spread. That's disgusting. But I do like the setup. It's just I can't put it on. The account's too small for me to risk the money on the call options, just buying a standalone call. And you definitely want to buy it close to the money. You don't want to buy way out of the money just because it's cheaper, because your probability of success is very slim when you do that. Now, we did do that on PSTG, right? We bought the $36 strike over here on this day, and that trade's been closed out. That trade made well over 100% on the actual trade itself, the option trade. So, yeah, it was a beautiful trade. I was expecting it to go back up there, and it did. Had a lot of unusual activity as well. That's what put me on the signal. And, yeah, that trade worked out good. Put in a little bear trap here, and then off to the races it went. A fantastic trade. Sat in it for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. I took profits once we got into the money, as at that point, the option was up by 100%. All right. LMT, it looked like it was going to break down, but it could be a trap. So you can watch 440.90. You might run into the same thing with this one. Stay away from Amgen as far as spreads go. The spread's too wide. Spread's too wide on this as well. I mean, 60 cents, but still, 60 cents is a lot. If you can get it filled in at the midpoint, maybe, but the skews against this one as well. As the implied volatility gets higher or lower as price goes higher, and it should be the opposite. Implied volatility should get higher. Now, it does way out of the money up here, right? But that's good for selling premium. That's good for premium sellers, especially if they think this is going to roll over or whatever. But we'll see what happens with it. I think it's going to break out to the upside. It's been accumulating. Had a nice rip to the upside here. Had a beat on earnings, and it's just been consolidating. As you can see, this is a pretty big range of consolidation. It's, all of this stuff in here. So, yeah, could get a nice run if it does break out. We took the Boeing trade, but that one's long done. Long done. Boeing just mooning. I wish I would have held on to that trade. Damn it, man. But it was like I said, it had a maximum profit potential anyways, which it would have been met because we put that trade on way down here under $200. We put it on as support down there. So we put it on right in here. Nice move, though, to the upside. It went. So we're looking good. Looking good. Maybe it pulls back. I wouldn't be a buyer up there on it. Got weekly resistance as well. Maybe if you break out of that range, then you can look for pullback entries. But it's had a pretty damn big move. These are 2 week candles. 1, 2, 3, 4. That's 8 weeks. But I don't know. Yep, they've all been bullish. 1, 2, 3, 4, 5, 6, 7, 8. You're on your 9th week. Straight bullish. Everything is so bullish. And yet people are still trying to short. Tesla's struggling. I can say that for myself as well. Like, so bullish. Why am I trying to short? Well, this is easy trade, right? Because this thing barely moves. So I can be wrong on this for multiple days and close it down. If it closes above 37.38 today or gets above this area here, 37.58, that'd be a 20-cent loss on the option. Not bad. So where's the loss at? Currently, it's setting at $11. It's a manageable loss. Very, very manageable. Right? All right. Good morning, Mr. Ed. How you doing, my friend? Michelle, good morning. Clipper 70s. Wait. There's also some fun around Apple Watch. Can't remember what. Saw it on the news. Very early in the morning. Fun? On Apple? I thought you could only FUD in crypto. Should look into this. Can you take a look at coin, please? Yeah, coin obviously been ripping. It's just it's in a no buy zone, right? I mean, you can't buy these highs. You're making massive bearish divergence. I mean, it's clearly it's there, right? Yeah, Bitcoin is actually coming off pretty good right now. So maybe we could buy a put on coin. Let's go look at coin. We might be able to take a trade right here, right now. Yes. It's 50-cent wide spread, $5. Let's see here. The implied volatility is huge. It's up 80%. Let's try one strike out of the money. Damn it. Yeah, I can't get it to work. Like I said, I can't risk $1,500, which you are risking if you put this trade on, right? So be careful. Unfortunately, I thought it would be much cheaper. Maybe we can go like a week or two out instead of so far out. Maybe it's better. Like, I mean, it needs to hit. It needs to hit soon also. Yeah, it's still messed up. Still can't really get anything going on it. But I mean, Bitcoin's pulling back pretty good right now. I'll show you. But it could just be pulling back into this demand. On the hourly is where you can see that pullback happening. Right here. But there's nothing saying that they won't buy it. I mean, you got a nice little swing there. Like, I was short up here. Right up there. So it literally just took me out of the trade, and now it's pulling back again. Oh, lovely Bitcoin, lovely. I love when it trades sideways. But the reason I was short was I was just trying to hedge because I do believe it's going to pull back sometime. I mean, it has to, right? Nothing goes straight up forever. We'll see if Bitcoin can pull back. On coin, if you can stomach buying a put on it pretty close to the money, right? I would buy it close to the money. And if Bitcoin continues its pullback, then coin should pull back as well. And with that bearish divergence also, I think coin is also a very heavily shorted ticker. Yeah, it's got a 23 or a 13% short interest. Not massive, but it's not as bad as AI's short float, but it's still got a pretty decent short float. So be careful on it. Obviously, this thing moves quickly. Quickly. Let's go look at other crypto stuff that has to do with Bitcoin. MSTR red on the day, but gapped way up. Riot gapping way up. Riot would probably be the better way to trade. Mara's gapping way up. I would be careful, actually, now that all of these things are gapping up. See, when you get into a situation like this, something is lying, right? Either Bitcoin is lying or the rest of these are. What I mean by that is Bitcoin has been pulling back for multiple days now. How many days? Well, if you count this as a higher close, 1, 2, 3, 4, a week or two, a week and a half. Bitcoin pulled back and it's been consolidating in the pullback. While these things are breaking out, making fresh highs and stuff. Like that's a fresh yearly high on Mara. But they have cheaper options. The problem with them will be implied volatility. You got over 120% on the implied volatility. So you're paying a ton for this trade. So what that means is you can be right, and if it just loses its implied volatility, you're going to lose money on the premium. I typically don't like to get long options or buy premium on either the put or call side if implied volatility is over 50. Just 50, I don't like to do it. This thing's up at 129%. So you need the move to happen, and you need the move to happen quick to make the money. But the good news on Mara is it's only $320 to get in the position. You don't need to put a spread on this. It doesn't move fast enough to really hurt you badly, like in 1 or 2 days. As long as you can watch the screens, plural, like I do. If you can do that, maybe you could day trade it, looking for a pullback. But this move on Bitcoin down could also get bought up. So you have to keep that in mind. This could just get bought up. I mean, it is a bull flag, and people buy bull flags. Support held. Boom, boom. I mean, the weekly looks good. You never even tagged the breakout weeks open here. On the monthly, it was a pullback to the 618% retracement. I'll show you. On that monthly candle, December's range, you pulled back to the 618 retracement of December's range. And that's where you got to bounce from. So, I mean, it does look like people are trying to buy it. The volume does not indicate the volume doesn't indicate anything. It actually indicates that we're going to see more bullish upside. Whenever the volume is like sloping down, it's typically bullish. You got the same thing happening here, right? One day you get a big, strong up green candle and then you break out, right? So that might still happen. We don't know. But, I mean, it's been bullish and it's been up for so long. I was just thinking that it would pull back. especially before the yearly open and before the halving. I was expecting it to pull back. Not happening though. Not happening at all. I mean, that's a pullback. It's just not the pullback I was looking for. These are not the droids you were looking for. But yeah, I would probably Clipper. I'd probably, if I was looking to like maybe try to short, I would instead of doing coin, I would probably look at Riot or Mara. Let's go look at the implied volatility on Riot, see if it's worse or better. It's about the same. It's a little better, but not much. 31 days out, you're still looking at but it's cheaper, right? It's cheaper. This thing doesn't move very fast, huh? You would need it to pull back down to around in here to make any good money on that position. So be very careful. But like I said, it's cheap. So the options they're not cheap. The options are overpriced, for one. All right. Very much so. Extremely overpriced. Like any other scenario, I would be looking to sell. Right? I'd be looking to sell puts on this instead of buying puts. But we are expecting a pullback on Bitcoin. We would expect this to pull back as well. Same thing. It's got bearish divergence on the daily. You haven't even hit oversold or overbought yet on the weekly. So it could still continue to go higher. If Bitcoin gets bought up, it will. And by the looks of these things, they just look like Bitcoin's probably going to get bought. Unless these roll over. So there might be a trade there. You just got to be willing to ask yourself, are you willing to short into something that is literally squeezing shorts as we speak? Mara and Riot do not make money, okay? So Mara and Riot are literally trades for Bitcoin. Like anybody that's trading these, they're trading it based on Bitcoin. 23% short interest on Mara. 18% short interest on Riot. The implied volatility is just too much. Too much. But those are the way that I would trade it. Instead of using coin, I would do Mara or Riot. Just look at that thing, man. Insane. Straight up. Good morning, Michael. Sorry, I said Michelle. My bad. We have a Michelle, so apologies, Michael. Bitcoin moving down, says MX. It sure is. It is intraday. It is today, right? It went up yesterday and stopped me out. But today it is definitely down. Yesterday revealed the shock news that 2023 Apple Watch models would be withdrawn from sale before the holidays following an earlier ruling that devices infringe on patents held by health tech Masimo. Wow. The newest Apple Watch models might be temporarily banned. I don't know. It seems like all they would have to do is recall it and then take out whatever part or whatever tech that it's infringing upon. Get rid of that tech, and then the Apple Watch would still be good. It's just one piece of technology, obviously, that it's infringing upon. Whoever has the copyright to that tech, like he said. We'll see though, that would probably cause Apple to have a pretty good correction. I can't even pronounce your name. I am sorry, but I can read your comment. UEC, Uranium Energy Corp. How long can it grow? Any thoughts? Well, first of all, I don't know anything about it, so I can't tell you how long it can grow. But if it's making money, it can grow indefinitely. All right? If it's making money, it can grow indefinitely. Let's go look at the longer term charts and see where we're at. So we're off the lows, which is good, and we're above $5, which is good. Essentially, what that means is anything under $5 is considered a penny stock, right? So next thing we got to figure out is, do they make money? FinViz is a free site, guys. You can find a lot of info on it. They do make money. They make very little money, but they do make money. So yeah, as long as they continue to make money, then they can continue to grow. As far as the monthly, you've seen a pullback. You are pulling back again on the weekly, which is nice. That's what you want. And it looks like the old area of resistance here is where it found support. So I'd watch it around $5.78. I mean, it's cheap enough to buy a few shares, and you can manage your risk easily on this trade. If it gets under $5, you let it go. Here's another thing. Even though it's trading above $5 right now, it does not mean it won't get hammered. It did not get hammered. Well, actually it has. Every time it's gotten above $5, it's gotten hammered. So what are these lows? Down to $2.31. So this could just be a huge distribution formation if people are selling it. That they are profitable at least, right? If it wasn't a profitable company, I would probably be looking to sell this thing instead of buying it. But if $5.78 holds, you could potentially look for long entries there. ES all-time high. Not quite. Here. Let me do this. And I'll make this chart big. We'll go out. Three years. And then let me get rid of the open interest. And the VWAP. All right, here you go. See, what a lot of people do is they forget to they forget to fix the gaps on this, right? When you have a contract expire, a lot of times the new contract will be trading for like $50 higher, right? So you got to go into your settings here on Thinkorswim, go to futures, and make sure you have this box checked. Because if you don't, you see that? You do make a fresh all-time high on ES futures. But that's without that gap right there. That's not a real gap. Okay? It's not a real gap. It didn't gap up $50 overnight. It's because that's when a contract rolled over. It expired and it moved to the next contract. And the next contract was trading higher. But if you fix that, it's not. All right? So just make sure, adjust for contract changes. Hit apply, hit OK. You've not made all-time highs yet. In fact, on the futures, you haven't even taken out this swing yet, but we have taken that swing out on the SPX. We haven't made all-time highs on the SPX yet, but we're close. We're very, very close. Very close. So yeah, not yet, but almost. We are almost there, ladies and gents. Almost there. Good stuff. I mean, it's just been bullish. But yeah, make sure, Gooplex, make sure you're adjusting for the contract change on the futures. That's why it's best to look at the SPX or the NDX, right? For me, the SPX is not delayed, but for some reason, the NDX is, which is the same thing as the NASDAQ. But it's made fresh all-time highs. But this is mostly tech. And think about all tech that has made fresh all-time highs. NVIDIA, Microsoft, Apple. You know, and those are big, big, big companies. They've made fresh all-time highs. So it's just a matter of time before SPX does too. You got bearish div going on. Oh, no, you don't. Never mind. Sorry about that. Well, yeah, you do. Yeah, you made a higher high on price, but not on the oscillator. So you do have bearish div, but I wouldn't be getting short on that. I'm sure people have been shorting it ever since here based on that fact. It made a higher close, so you had bearish div all the way back on this day here. That's why you had, or this week. That's why you got 1, 2, 3 weeks of like sideways. It's chewing through those shorts, and obviously it did chew through them. They were shorting based on the divergence. We are expecting a pullback. We just don't know when we're going to get it. I mean, this was a beautiful bull flag, but it went beyond where we would be looking to buy it. I mean, it made a perfect bull flag on the or a bear flag or a bear trap on the weekly. So I mean, that would have been a fantastic place to look to be a buyer. Right there. Based on the weekly. The daily, it went much further than that. On the daily, it went below the 200 exponential. Not on the NDX, the SPX. Well below it. So on the daily, you know, we were looking for shorts. But then it all changed. The market started to price in rate cuts, and boom, up she went. Massive move. That's why he called it FUD. Yeah, Tesla, we missed the Tesla trade. That's not to say that there won't be another chance to get in on Tesla. It's just the best trade we missed, right? This was support in accumulation, right? Through here. That's why we were looking for longs. We was wanting this day to close around 234. I even set up the trade and everything, but it closed too high. We should have taken it. So now it's, you know, it squashed the shorts. Anybody that was shorting it based on this trend line, based on this resistance, because this is the resistance, it's obviously holding. You got a wick high right there that lines up beautifully with this close. You opened above it, but you closed back under it. And the close is the important part when it comes to resistance and support. The close is what's important. And then it traded right back down to support. Even opened under it, but you closed above it. So this was the support. This was the price we were looking for longs. 233.59. We just missed the trade. We can't catch them all. but we can catch a lot of them. I would let it pull back, and I would want it to pull back at least back to 246.72 and hold, as that is the breakout point. So we would want to see it maybe do something like this, right? Longer term. And then we could look for a bullish entry around that point and look for the move on higher. I don't know what that 276.36 is, so let's get rid of it. It's nothing. And that. So, I mean, Tesla is a tech play, and it hasn't made fresh yearly highs yet. So Tesla might be something to look to buy around the yearly opening range. It just depends on where it's at. The problem with these things is, as we know, once they get going, sometimes they don't pull back. I mean, once you broke out of consolidation here, you got one chance. Excuse me. You got one chance and one chance only to buy this, right? This would have been your resistance here. Right there. And then here's the breakout, consolidation, and then you checked resistance to see if it acted as support. It did. That would have been your entry. And then since it took off, it really didn't give you much of an opportunity to get long again. And then we had that long-term sideways accumulation. But, I mean, I expect it will go higher. Now, I think they missed on delivery, or not deliveries. Yeah, deliveries or something on the last earnings. They missed. But still, I mean, Tesla is a stock that everybody wants to own, right? And since its relative strength compared to the S&P 500 is low, this is a lagger. So if people are going to be looking to rush back in to buy stocks, tech stocks, then Tesla would definitely be on my watch list. But we got to, figure out why is it lagging so hard compared to the other tech stocks? Right? Why is it lagging so hard? I mean, Nvidia almost made fresh all-time highs 2 days ago. Microsoft is accumulating, and we're watching 365 for potential bullish entries. Google consolidated here. This is where you should have been looking to be a buyer. Meta didn't really give us that, that beautiful support retest. It just traded down and then up. Fresh yearly highs. Apple, we'll see. We'll see how it ends up playing out. I mean, do people really care about the Apple Watch? I mean, I know it's a huge source of income for Apple, but at the same time, they were a good stock to own before the Apple Watch. Apple just makes freaking money. They just print money. But yeah, we got to wait for Tesla to pull back into support. Tesla, John, and then we will buy it. Fuzzy Uzzy. Good morning, Heath. Do you think SOXL at 28.55 would be a good entry, or does it need more of a correction before entering? SOXL. Yeah. 28.55. It could be, as it is the old breakout area. But remember, it might overshoot it. But it is a good area to watch. This settles every day, probably. These 3x things, I tell people to be careful with them because they resettle on a daily basis. This one tells you that it resettles daily. All right. So what that means is it hasn't really had a 119% return. Like if you would have bought it down here and held through all of that, you would not have made 119% because it's resettled daily. You would be better off to just go buy stocks and, leverage it up if you can. If you can't, then just buy it outright because any returns that it makes, I mean, this is what SOX L is following. It's just a 3-time levered ETF, but it's settled daily. This is expensive, so that could be the reason why you're looking at SOX. Here's one that's also a semiconductor ETF, a little bit more cheap, but not as cheap as SOX L. So, I mean, you can buy it there, but those 3-time levered ETFs are built for day traders. That's what they're really designed for day trading, not long-term holds, because you're going to pay a fee for holding it long-term and the resettlement's going to kill you. So, I mean, you can look to buy it there, but the percentage gain, if you do hold it for a long time, is going to be minimal. I don't know what the actual fees are to hold this long term. I would have to go into it and break it down and read and all that stuff to see basically how much will they charge you to sit in it day after day, because it is resettled every single day. So you would be paying fees on a daily basis to sit in it. Does that make sense? A lot of people don't know this stuff, right? Especially if they're new at trading. They think, oh wow, this is a 3 times levered ETF, so I'm going to buy this one because this one makes more of a percentage gain than the others. That's just not true. It's just not true. It's settled every single day. You're going to pay fees on that. So be careful. These generally are just built for day traders. Day traders that want to jump on momentum on something that's moving up quickly. We got Mr. Bitcoin pulling back to the midpoint, a little bit better than the midpoint of this breakdown candle. If you bought it, you definitely want to see it close higher than this. If you're shorting it, right here would be a decent entry. Let's get that up there, and let's get this right there, and let's see where that is. So it's yesterday's close. Yep, it's yesterday's close. So actually, it's daily res. So if you think Bitcoin's going to go back down, that's a good area to enter short. 42,650. It's not quite hit it yet on the week's platform. For you guys that don't have a trading platform for Bitcoin, like if you're new or whatever here, we use Weeks. There is a link in the description. If you use that link, it'll save you 20% on all trading fees because BitGet no longer lets U.S. citizens trade there. Weeks will still yet allow U.S. citizens to trade until the government regulations reach them, and then who knows, right? But if you use it, just make sure you're responsible. Only put trading capital on exchanges, please. Restore sells. Yeah. S&P 500 making fresh highs on the day. Fresh highs on the day for the NASDAQ. And this thing is doing poorly. XLF. We may close that. We'll keep an eye. I got Bitcoin pulled up, so I'll keep an eye on it. If it holds at 42,650, maybe we take a short at it. Look for it to run back down to maybe around here. You do have this swing, though, that could act as support. So we'll keep our eyes on it. Like I said, I got it pulled up on the other monitor. Euro USD having a nice move to the upside. The other day I did take profits on this, or yesterday I should say. I did take profits on this on around the high of day. I got my long entry right here. And so I went ahead and took 2/3 of the position off. And I moved my stop up to break even. And I'm going to leave that trade on. This is monthly res. Right there. So it's going to take quite a bit to break out of it. We'll see if it's able to do so. If it does, then obviously we'll expect it to go a little bit higher. Aussie dollar breaking out as we speak. Aussie has gotten a lot of strength lately because Aussie is considered to be a risk-on currency. So whenever you have risk-on appetite in the trading or in the markets, Aussie dollar is typically looked at as a risk-on asset. So if there's dollar weakness, Aussie dollar is where people look to go as it generates more yield, as it's a pretty good mover. Today you're up almost a full %. Also, on the yen, they did not change anything. All right? They did not hike. They're still at negative interest rates. They did nothing. Now, I didn't hear the speech, or I didn't get to listen to the speech to see what they had to say about yield curve controls. But since they did not change anything, I would say this would probably be a long. And I would look for that long on something like Aussie yen. You can't get long on it today, obviously, because it's up almost 2%, which in FX is a massive move. So you can't buy it today, but you can buy pullbacks into support whenever a support is made or whatever. You can look for buying opportunities on this. All right. I like this better than the euro because obviously Aussie is stronger than the euro. Now, it doesn't mean it'll be stronger every day, but it is today. Aussie's the strongest currency on the day. Up almost a full %. I'd definitely be looking for long entries on Aussie yen. I mean, I will be looking for long entries on Aussie yen because the Japanese yen is just probably going to get sold right back down. Everybody was looking for rate hikes. That's why you had this buying move up into the BOJ rate decision, because there were hints that they were going to stop with the yield curve controls and potentially get above negative interest rates, get in the positive territory of interest rates because their inflation is moving higher. And since they did not do that, this thing is probably going to get hammered. It's hammer time. So the best way to short this, in my opinion, would be to look for longs on Aussie yen. But do that at support, please. Have you quit smoking, says Trollex. Not yet. Not yet. I smoke way less than I used to. I just haven't stopped altogether. Not yet. I need to. And eventually I will. I'm sure of it. USD CAD. I mean, as long as you have dollar weakness, this thing's probably going to continue to go down. But Canadian inflation did jump up today. On CPI went up to 3. Was it 3.1? I don't remember, but I know it went up. Let's go see how high. Yeah. It was 3.1 last month. Oh no, it didn't go up. Sorry. It stayed unchanged. But they were expecting a 2.9%. That's the headline number. That excludes energy and food. But still it did not drop. So sticky there. And then CPI, core CPI looked good. And year over year ticked up. Not good. Yeah, not good. So the Canadian dollar is doing what exactly? It's up 0.33%. So it's really not doing anything at all. There's your full percent on Aussie dollar. Insane. Just absolutely rocking and rolling. The Swissy is rocking and rolling as well. Man, the Swiss franc has just been bullish for a long time. So maybe Swiss yen. I mean, today, Aussie is stronger, but yeah, this thing cycled almost down to oversold. They did not cut. There you go. Or they did not hike. So I would look for this thing to keep going. We just need a pullback. I think Aussie yen offers the better opportunity. Let's see here. What we got? Yeah, there's still some opportunity left on that. That's what I would watch for the yen short. Unless you can trade futures, right here is the yen right there. So if we wanted to trade the futures, we could. We could trade options on them, or we could just go right out there and trade the actual futures contract itself. And that's here. So basically, we'd be looking to short this beast. There's probably the decision. Nah, it's at 134. There's the decision. Nope, 948. What time was it? It shouldn't be 948. It should have been 10 o'clock. And then there was probably the press conference. Let's see what it looks like on a daily real quick. We want more than that. So it's pulling back a little bit. Yeah, you could short this. I don't know how much it is to trade it. I mean, there's the commissions $1.25, and then the fee would be $1.92. Estimated total would be $317. But I mean, I don't know how fast it moves. Like, how much money are we talking per tick on this? But one could just short this. Just make sure you get out of it before the expiration on the futures contract. Otherwise, you're going to get a crate full of yens. Respect. I quit, man. Good. Good. Because it's terrible habit. It's disgusting. It's no good for you. It literally kills you. It doesn't have any benefit whatsoever to life in any way at all. It's almost stupid to do. I mean, it is completely stupid to do. It's a waste of money, waste of time, waste of everything. Significant health problems ensue. Yeah, it's terrible. It's a terrible habit. Has anybody got any other questions or anything else that they want me to look at? Bitcoin did ultimately push a little bit higher, but it is back down. He did push a little bit higher, but you are coming back off a little bit. That was probably just to snack them stops for anybody that got long directly at the daily resistance. So I don't know if you're going to get another chance for it or not. You might. Maybe in the next hourly candle you'll get another test of it. The S&P is still really strong. I mean, I see what they've done on the day because there was a $15 move expected and we've blown that out. So we've moved $17 and there was a $15 expected move. So there's your risk right there. The VIX just cannot price it. Anybody looking to get short today, they are getting beat up. You're above the expected move. However, the NASDAQ is moving higher, but it's not moving higher like as strongly as the S&P did. Oh, and oil. We should talk about oil because BP has stopped using shit. I forgot the name of that place, but basically they quit going through there, and that's caused oil to spike. Not tremendously, but it did cause a spike yesterday. Yesterday, once BP released that news that they were going to stop going through there because of the Houthis or whatever, some terrorist group over there in Egypt is hijacking all the boats that go through that little lock or that, ditch they cut through so that way you don't have to go all the way around Africa. I just can't remember the name of the damn thing. It's like our Panama Canal, but over in Africa. Well, anyways, they're not going through there anymore, so that caused oil to spike yesterday. I'm not sure if this is going to actually cause a massive. I mean, it's going to cause at least a 10 to 14 day difference on the journey to go all the way around Africa. So it's going to cost time. It's going to cost money. So oil might get a bounce out of this for a little monthly support. So I mean, we were expecting a bounce from there anyways, right? I mean, it's monthly support. Well, this isn't, but it did bounce around monthly support. Was it weekly support? Yeah, it was weekly support. So we were looking for a bounce there, but just a bounce. But this new bad news literally helped it get it going. There was something there too. I don't know. Maybe I'm looking at the wrong one. Yeah, weekly support. Weekly support. That's where it bounced. Here yesterday. Trading as an inside day today, but as it was pulling back pretty hard, it is now spiking back to the upside, trading 73.60, 73.60 on oil. Suez Canal, yes, exactly. That's it. The Red Sea Channel. Yep. Thank you guys for the help. I knew the name of it. It was just wouldn't come to the front of my brain. It's just sitting back there waving at me. Yes, the Suez Canal. Exactly. So it might give oil a bounce or a pop. We'll see. I don't know how for how long that'll last, because America is literally dumping a ton of supply of oil onto the markets to keep the CPI number down. That's just my opinion. I don't have proof of that, but that's just an opinion. Another Aussie pair, Aussie Mexican. So the Mexican peso, give me 1 second as I go into the macro tab over here. Looking. Okay, so the Mexican peso has a 12% interest rate. I think it's higher than that, and I don't have it up there in interest rates. Damn it. Need to put it up there. But they have a 12% interest rate, whereas the Australian dollar has a 4.35% interest rate. So basically what that means is since there's such a wide discrepancy between interest rates, people were long the Mexican dollar for the carry trade, for the interest rate differential. And that is why you've seen nothing more than a massive run to the downside. And I do expect it to continue. All right. As long as they run a very high interest rate like that, it is very, popular for investors to get the carry trade. So the Mexican peso has pretty much been dominating all currencies because of that massive interest rate. I mean, it's massive. Now you will get spike ups and, that'll last for several weeks, months even. But eventually, ultimately, I would probably say that it's probably going to go back to the downside again. You're trading above monthly resistance, and you have a big, massive swing all the way over here. But I don't know if you're going to make it up to $12.63 or not. But we'll mark it anyways, as it is a massive turn. It did act as support here. It did break down there, and it did retest it there. So that would have been a key level to watch for short entries back then. Let's see if we got anything near term on the weekly. I mean, you're in the weekly res, and then you got another one right above it, another one above that, another one above that. So I would say if it could get up to here, 12.15, I would look for short entries on Aussie Mexican peso until they fix that interest rate. And Brian said he just went long Excelon Corp, EXC, Excelon Corp. Hey, Brian loves to go long on these massive rips to the downside. I don't know why, but I mean, he's up. If he caught the open, he's up 40 cents. That's very dangerous stuff, man. Very dangerous. This thing is getting absolutely wrecked. Look at that freaking candle. That's as bearish engulfing as you can get in a downtrending asset. I mean, let's see what I mean, this is a short all the way. Put in a little bull trap right there and then boom, hammer time. But he just gets a pop. He gets in and then he makes, 1 or 2% or whatever he can and he bounces. You know what I mean? But it's still not the best strategy in the world because how many of these things has he not got, right? How many of them have not worked? The human brain loves to remember all the times that the stuff worked while forgetting about all the other times it did not. But that was a pretty severe pullback, and it did hit oversold there. So a bounce is all I would expect out of that. Well, we try to position ourselves to catch, longer term, better trades. We're not quite there. Let's go ahead and get rid of XLF as it is continuing to push up. I'm going to leave it alone because it's not looking that great. I mean, it does on the daily, obviously, but at least it doesn't look like this, right? There is no bearish divergence happening on this either. That hourly right there is the one good thing it's got going for it. So if it closes another higher hourly, I'll probably close that trade down, even though it's not even close to my risk unit. So technically, I could hold this all the way into a $60 loss. Was weekly support. I was watching 1232. 1232. Why can't I find it? No, what the hell? So this... All right. I can't trade this. That's weird. You would think that you'd be able to trade this on Oanda, but I guess not. He said, what was it? 1232. Yeah, 1232. Yeah. Yeah, it's roughly around the 1215 area. Anywhere in between these two areas right here, I would probably look to short it. If you can trade it, that is, because I can't trade it. It's not on Forex.com or Oanda, which is extremely weird. I mean, it's got a pretty wide spread. On Saxo, I don't even know who this is. Usually when you see it on the ICE market, it's not very popular, or it's like a lot of people get Forex wrong. Like they want me to look at CAD USD. Well, CAD USD isn't actually something I can trade, or they can either, unless they have an account with ICE, and it's very unlikely that they do. Market making firms are usually the ones that have the account on the ICE markets, but it's USD CAD, right? US dollar versus the Canadian dollar. I mean, you can type Canadian dollar CAD USD, and it's just going to be inverse of the USD, but you can't trade it. See? You can't trade it on anything. Saxo and ICE. But if you type it in the right way, USD CAD, boom, you get all these brokers. So, or exchanges. It's just one of those things. But I figured Australian dollar Mexican peso would be a tradable asset for me, but I guess not. But yeah, watch anywhere in those two levels there. Let's run an unusual options activity scan real quick, and then we'll wrap it up. Here. Let me do something real quick. Oh, I already have it. Already have it pulled up. All right, so typically this is what we would do. Like, I don't care about all these, right? Because these are all near-term options. But I like to find this right here. One company, someone just went and dumped 4,536 contracts for Jan 19. So near term. So we will pull that up. APLD. We want to trade it. It was the Jan 19 $8 call. Jan 19 $8. Look at the volume. It's actually a spread. It's a bullish spread. Because look at the volume here. See the volume there? Volume there. So they have put on a bullish call spread. One. And then sell that one for 37 cents. The max profit's only 63. That's why he bought 4,500 contracts. Now let's go look at APLD on the charts and see if we can justify taking this trade. Applied Digital Corp. Man, I don't want to take it now. But he's looking for it to get to $8. Can it get there? I think it could. The problem is I would have rather put this on at the open of the day and not now. So basically, that just means that homeboy put on a bullish call spread here. Whoever it is. And then CRM is another one that's all by itself. That's not very big, huge size there. 33.75. I like it to be over 4K. And these trades don't always work either because we don't know what they're doing. We don't know if they're hedging a long position that they have or if they're hedging a short position that they have. Because they bought 3,375 contracts. We know it was one person because there's only one. It's only in here one time. So it was a one-time trade. And they can't be hedging anything because their expiration is in 4 days. Friday, they're looking for a 270 call Friday. It was CRM, right? Salesforce? Yeah. Oh, it's just a gamble. They're looking for 270 to happen by Friday. It is a recent breakout, and it is possible. This would be not a bad trade. I mean, you're risking $40 to make 60. You could put on like 10 of these if you wanted to. It's just depending on your risk, right? And what you're expecting to get out of the trade. Or just buy the $8 strike if you think it's going to work. Let's go look at the CRM. See what they got going on there with the 270. And it was D's 22. So here it is. That's not very expensive. Wow, I thought it'd be much more expensive. And you can see about what you'll make if you get in the money. Right? So you're literally turning $1 into 283. $1 potentially into that. But you better get there or you're going to lose that whole dollar. You better get there by Friday. And it's right on the outer edge of the expected move. Here's the expected move. So it's like right on the outside of the expected move. And they could have sold the calls too. It don't tell us what they did. We just know that they are interested in that call at that strike. And on the chart, I mean, it is a fresh breakout. So I don't think someone would be dumb enough to sell that call. No, I believe they probably are just taking a gamble. I mean, think about it. All it's got to do is get up to 270. If it gets up to 271, you're going to be in the money. You turn $1 into 3 potentially. Not bad. Not bad at all. All right, you guys have a fantastic rest of your day. If there's no other questions, wait, let's see if there's one more in here. Nope. Well, yeah, Shopify and Riot. 1775 call. This is a gamble, and this is a gamble. Anytime I see really close to expiration, I know it's just probably a gamble. But this one right here,